Psychology, risk management, what is it? And what it is a positive expectancy model that you trade with the right position sizing consistently. That is what creates a profitable trader. And that's a deep subject to learn. You can study a long time to find that.
Hey there, traders. Welcome back to a very special edition of OVTLYR Live, where I completely botched the intro. But what I was saying was an incredible friend of mine who I reached out to, it feels like a million years ago, to teach me how to trade. And I'm so stoked to be able to have him on the show today. Author of New Trader, Rich Trader, social media expert here. When I say social media expert, dude has over 600,000 followers, so he definitely knows how to teach people how to trade, and a ton of people want to listen to him as well. So thank you so much for your time and being a little patient with me. Here's our friend, the one and only Steve Burns. Steve, thank you so much for your time to come on today.
Hey, Chris, glad to catch up with you and been a long time. Thanks for having me on.
Yeah, I when I was trading and just losing money hand over fist, Steve was one of the people that I reached out to because I was thinking to myself, if I'm going to learn to trade, I'm not going to learn how to trade from somebody who teaches theory. I want to learn to trade from somebody who's actually done it. And I reached out to several people, and Steve was super awesome in being able to help me out in lots of different ways. And I think it's really funny to think about how the very first time that Steve and I started working together, I'll never forget, because it was in the upstairs room of extra room in our house. And I didn't even know what a moving average was. I didn't know what a trend was. And Steve asked me, he said, well, Chris, is the stock trending up or is it down? And I said, I don't know, Steve. How do you know? And he's like, well, you just add a moving average. And if it's above the moving average, then it's trending up. If it's below the moving average, then it's trending down. That is how rudimentary it was when I first started. And I am so grateful that somebody had that kind of patience to work with somebody as ignorant as I was at that time. So, Steve, really appreciate you doing that. Now, Steve has written tons of books. Steve, how many books have you written at this point?
Over 20, but I've lost count.
He's written so many books, he's lost count. I'll tell you what, one of my top 5 all-time trading books is New Trader, Rich Trader. In fact, I should have grabbed this earlier, but another one of mine that you helped with is, as you see, this is the library. Where's it at? Is this one here, How I Made $2 Million in the Stock Market. Now, this one's really cool because this is a almost like a historical documentary that Nicholas Darvis wrote. And then Steve came through and added his updated notes to it on every single chapter. And what year was this published? Jeez. The original was in the 50s. This is from 2012. So a couple books right there that I absolutely recommend everybody to get into are New Trader, Rich Trader, and How I Made $2 million in the stock market. So, Steve, if you don't mind, could you give us a little background on how you got into trading?
Yeah, it's really so natural. It all started, even as a teenager. I always loved business, first of all. I got to work in the mall when I was a kid and loved the business and thinking about, which was all the P&Ls of all the businesses in the mall and how they operated and how sales flowed through a balance sheet. So really, it all started with like business, the love of business. So then I started realizing that those were publicly traded companies and I could invest in those businesses. So I thought, well, that's, fascinating. And then I started looking and I'm a teenager, we're talking 16, 17 years old. I started looking at the papers and looking at stock prices in the newspaper. Back we had paper newspapers, but some of the Zoomers won't even really see any of those. Uh, and then what was a looking at business, entrepreneurship, capitalism. I got really passionate about all that because of the opportunity. I thought it was amazing in the 80s. I got to live through the mall era and got to be in all, be in the mall. And it was just, I loved everything about it. They'd be involved in the business, the publicly traded companies, and one of the big moments for me was a person, a insurance salesman came through. I think it was a whole life insurance salesman, left a booklet where it showed compounding gains of a chart, and it was just an average. I don't know what it was, 8, 10% gains on the investment inside of the whole life policy. And it showed the growth of capital with just the compounding. And that really got me thinking. I was like 17 years old. I thought, man, if I got some capital going at my age, and just compounded it for year over year. I mean, this is astounding what I could have, in 10, 5, 10, 15 years. And so that really got me into building portfolio and when I was 18 and getting started and growing and trying to compound the gains and putting more money into it. And I really got started there, and then it evolved into investing, mutual funds. I got to have the benefit of the Nasdaq run in the '90s, which you think you're just a genius in the '90s, the way the Nasdaq just ran. Sort of like now, where you just get in, you hold, okay, everything's fine, you just keep on going, and you double down, and you get in, and I started out really with diversified tech funds, mutual funds, and I just had astounding returns on those. And then really my real education came in around March of I started getting more active with going in and out and selling into peaks and buying bottoms and like 99 and 2000 because the volatility started really picking up in 2000. And but I really learned some lessons from about March to 2000 on 2001, 9/11. I had about a 50% drawdown from peak, and that was after having just phenomenal double digit returns,
Mm.
20, 30% returns during the tech era, which was pretty common. Even having more than that, some years were 40% returns. Even in like diversified tech mutual funds, which was crazy. That was even before the time of most ETFs back then. So, then but I started learning some lessons after 2001, 2002. I'm like, whoa, I don't want to ever take a 50% drawdown again like that. That really set me back on my compounding path. So then I started learning more about trend following and active position trading, and had another great run from 2003, about mid 2003 up until 2007. Had another phenomenal run, double digit returns, great years. And but then I was like, 2007 reminds me of now actually, where something just wasn't quite right. It was just too easy,
Mm.
much too easy, too long. And that time, like, I'm not taking a 50% drawdown again. So I started like preparing exit strategies, which I had some big positions in individual stocks and was just letting them run wild and make some phenomenal gains. But I was leery. But the for time I started getting leery around January of 2008, late 2007, I started seeing some problems. Early like January 2008, I was very leery, but they still went on. Started going mainly sideways, but then I was ready and started going to cash and staying in cash for all my biggest accounts during the 2008 meltdown. I was on the sidelines watching most of it. I did a little bit
Mhm.
of day trading, dabbled in day trading for the first time, 2008, because the volatility was so crazy. But that really was my thing. But I did avoid the drawdown from the 2008 massacre, and
Yeah.
just kept learning, going through each market phase and learning and growing. I think my best growth. I learned risk management 2001, 2002, and I learned the art of the exit, 2000, early 2008, and position trading during those years, 2003. I did heavy studying. I read hundreds and hundreds and hundreds of trading books between 2002 to 2007, 8. I was reading a trading book every few days.
Mhm.
I could have probably read about 20 and spared myself about 400, but but I did that and then came
I know
back and
exactly what you mean.
just kept
What are some
trading
of those
and
trading books that,
compounding and going full time and enjoying the game and it got to just wanting to share so much. Like my social media was like a stream of consciousness and just sharing what I learned and my real life lessons, my study of the legendary traders, the market wizards, the trend followers, and just sharing it. It's just really natural how everything evolved. I don't know if I could have stopped all this from the way it worked out if I tried,
hmm.
but yeah, that's the shortest version I can give you of that story.
Well, so what are some of those trading books that you would and wouldn't recommend? Yeah, I mean, you don't have to say the wouldn't recommends, but there was one that I read and
Yeah, I would stick in the realm. Yes, to stick in the realm of the real trading stories, like the Nicholas Darvises, the Jesse Livermores, for the good and the bad lessons of those, and a lot of risk management lessons with Jesse Livermore. Plus, one of the greatest traders who ever lived, which people have his story confused a lot. I think he just died and committed suicide. He had a lot of bipolar issues, and he also inflation adjusted, he probably made $1 billion
yeah,
inflation adjusted during the Great Depression crash after going short over and over again. The Market Wizards, whole series of Market Wizards books. Jack Swager, one of the top. I mean, you can see every style of Market Wizards really helps you pick out the strategy that you want to use yourself. Covell's top tier trend following books, goes down to all
Mhm.
the principles of trend following. You also got and the books written by the market wizards and the trend followers. You go down
Yep.
that path. That's a great path to go down. I'm more of the beginner's gateway to new traders. To start out at the very start where you can understand it. I'll give you like the comprehensive skills, help you build your vocabulary up early
Mhm.
and learn the very basics. So like I'm a stair step, and then you can grow into more complex books because that's the key is the comprehension. You have to. It's like learning another language. You have to build your comprehension skills so you even understand the more advanced trading books as you read them and understand the context. So, building up the skills of comprehension.
Well, we'll probably be reading you in the next edition of Market Wizards out there, I'm sure.
I was almost John Boyk. I was almost in a John Boyk unknown traders. John Boyk has another.
You know
He's
John
another
Boy.
great series of books. Yeah, but I was going to try to compile all my brokerage accounts, find them all because I had three different brokers, and I didn't save the paper account. Switch brokers. So I don't know. He didn't get the publishing deal with McGraw Hill, so I never had to go try
Mhm.
to locate him. So that's as close as I've come. But that was back then, and the size of my accounts was dramatically different over the years from when I started and from now. So it's fascinating how plus the size of the trading it counts a lot too for your success.
Right. So, um, I'll never forget when you and I were working together one day, and I was telling you about my particular style of trading at the time before I started making any actual money, and I was selling lots of calls, selling lots of puts, basically counter trend following by the absolute worst way possible. So when the market's going up, selling calls; when the market's going down, selling puts. And I remember you telling me one day, you're like, Chris, I used to trade that way, but then I realized that I wanted to make money. And there were a couple of times in my life that was one, and another one was when Minervini said, um, "That's why your trades suck, Chris." Like those two moments between you and Minervini were like, okay, I need to just shut up and I need to listen because these guys have made money, and me telling them what I am doing is not working, and I clearly don't need to be telling them anything, and I just need to shut up and listen. So I'm super stoked that you did take the time to work with me as well as work on all these trading books. I mean, I can't imagine how much time you've invested in all these.
Actually, I started as a book reviewer because as I was reading, I read over 400 investing and trading books. I read over 1,000, like 1,300 nonfiction books, but it's like 400 plus investing, trading, finance books. And I was doing book reviews on Amazon. It was a way for me to, recapture and summarize and reinforce what I learned and the key principles. And I had those reviews I could refer back to. That's what I
Mhm.
started with. And that's where sort of I met all the other trading authors, and I ended up being at the peak somewhere, I don't know, was it 2008 or 9? I started 2005 reviewing the trading books. There's still like thousands of book reviews I've done online in Amazon. And I was the 154th most helpful Amazon reviewer on all of Amazon in
Ah,
all categories in like, I don't know, 2009, 2008 or so. So I had written and those are almost all trading books for the first 4 or 5 years and investing books. So I thought that, and then that's sort of, it's like all of that. It's like almost like it was all in me, and I had to like get it out and write it all down. And then my books actually helped me every time I wrote a book about any topic. It made me a better trader every single time. I'd come out of writing a book, and I'd be better at what I did. What they say, that if you want to learn something, deeper, teach it. So it
yeah, I've
also
heard that.
reinforced
Yeah.
the writing the books helped reinforce after reading all the books, reviewing all the books, and then writing my own books. That was like how I educated myself.
hmm Well, talking about like New Trader, Rich Trader, what I really appreciate about that book in particular, and like I said, we've gone through every single chapter. And the funny part is, in fact, let me share my screen. The funny part about this is when I was going through it, I found my Kindle version, and I had all my notes in it from the first time I read it ages ago. And so I was going through and I was looking at all these highlights, like um, what have I learned since that point? And it was really cool to go back and do that. But there's a couple things that, or I wouldn't say a couple things, so much of what is discussed in this book that you wrote ages ago is still applicable and still the way that I personally trade today. Um, do you feel that you've had any personal changes in the way that you've been trading, maybe in the last couple of years or so versus the last decade? Has anything really changed?
Yeah, I try to make the book evergreen, so, like, they were principles, they were timeless evergreen principles. That's what I tried to design it to do, to be, a great classic trading book that could be read for my entire lifetime and never have to really update much of it. But, yeah, I've evolved into more, because the trends have been so choppy lately, uh,
Mhm.
it's hard to catch. I've really evolved more into a swing trade. I used to be a really longer term trend follower, and I mean, can slim, like the buy the breakout of the growth stock like the Darvis. I mean, great success with that method for 2003, 2007. 90s were great. 2012 was a great year, but there's years where that stuff just is not functioning. I have other strategy. I have swing trading. I short. I used to not short very much. I quit got out of that habit, but then I started again shorting into these overbought crazy moves higher that I just think
Mm.
when I think this is the stupidest thing I've ever seen. Who in their right mind would buy this in this place? I've turned it into a short signal with overbought reading when it reverses and I see some distribution. I do go in and short. I have changed to some shorter term swing trading and tighten my time frame up a bit. And if a trend does work out again and something does have a signal and a breakout, I will still trade that way. But this just the market itself has become more erratic and more range bound more times, and the breakouts are so violent and sudden. And
Mm.
I've expanded my watch list to give myself more opportunities across more charts than just using the leading. I used to trade like the leading tech stocks and the indexes. So I have expanded my watch list to a lot of different dynamics. So expanded watch list, and I take a lot of shorter time frames than I used to take. And I take less, I capture less of the big trends because there's just less of them. I mean, every now and then you'll have some go nuts, but it's actually more rare now than it used to be.
Yeah. I've found that too, that my trading has been, I mean, I don't remember. It's been so long since I've had a trade on for more than 2 weeks, right? Just
Yeah.
something, put it
Yeah.
on, let it work for a few days and take it off
Yeah.
situation. It's just been ages since we've had really long runs. But if you don't mind, Steve, let me jump in and say hi to everybody. And then I
Yeah.
know
Sure.
that probably going to get some questions and some feedback in the chat. So if you're watching this live, this is an opportunity to work directly with Steve right here. Feel free to ask any sort of question. I'm sure Steve is open to anything from trading basics to maybe something in one of his books, anything like that. We can put on the table. Just any way that we can help you out. So Michael Wales is here. Good to see you. He says, Buenos dias, amigos. Leo's here. Mahesh is here. Wes is here. Randy's here. We've got Michael from Germany here. Dave is here. We've got Tug. And then everybody tell me that I had my audio turned off, which I fixed. We've got Peter here. We've got Mikey Mike here. Sebastian also from Germany. Mikey Mike says the learning curve just continues to get steeper. He's new into trading, but um, you know, it's helping having Mikey Mike around because that he is new to trading. You've got to kind of like change the gears, right? Go back to the beginning. It's like, yeah, of course, it's so second nature to us now that we've been doing this for so long. But not everybody's, you and I, and had a chance to do this for ages. Um, Michael says the books are great. I've read quite a few of them, and they are so easy to digest. And you have taken a somewhat dry subject and made them engaging, double engaging, it seems like. Brian says, what was your most painful trade where you learned the most from, and what did you learn? Great question, Brian.
It's a really good question. I remember a morning where I took a momentum trade into strength. What was it? It's like two crazy wild stocks to I remember what it was. It was like Priceline and Intuitive Surgical. I think just two high beta momentum volatile stocks, and they had a big surge up in the morning, a breakout. This was probably, gosh, 12, 12 more years ago. And I went in with too big. I just, was, back when I had, it took me a long time to get trading too big out of my system because I had so much success for so long. It was just stupid. Especially, and so I went in way too big. I lost like $4,000 in like in the opening hour, and it was like supposed to be a long term momentum breakout trade. And had to like stop out of it that morning. I don't know why I remember that specific one. I've had bigger losses and more diverse losses and longer pain, different things. But that morning, just to lose $4,000 that quickly at that point in the game was just a chunk of money for my. I was at my taxable trading account at the time. That was a lot of money. That was a lot of gains I gave back. That's one of the things that cured me of my trading so big. But trading so big is what got me a lot of my big early returns because that's one thing when you're trading, you're starting out, you're in $5,000, 10,000. I traded huge, 15, 20,000, 25. You keep growing your account, you're successful. But then when you get up 50,000, $100,000 accounts, you start trading bigger positions. It's funny how you have to scale yourself up mentally and emotionally to be able to handle it. Because like when I started out, like $5,000 was my trading account 30 years ago. And then like whatever it was, 15 years later, I lose four or $5,000 in one quick trade in 1 hour. But it's funny how you have to mentally spread. There's no way to just come and start trading, multiple six-figure account. You'd wet yourself. It would be too much. You have to scale yourself up to that size and get comfortable with it and have something that's not too volatile to, to cause you too much stress where you can't even follow your trading. Large
Yeah,
amounts
I
with smaller accounts was a one was painful on a percentage basis.
I was just telling somebody the other day that whenever you start trading, you really should start with as small as you can. Like $5,000 or less is a great place to start because then you don't come into it thinking, I've got this big bankroll. I don't care if I lose on a few. I've still got plenty of funds, right? If you come in at $5,000, you got to make those trades count. You got to actually work them, right? You got to really pay attention and figure out what you're doing. And then if you can scale a $5,000 account, you can scale a $500,000 account, right? But you can't start with a $500,000 account because mentally, well, you could
Mm,
if
yeah.
you want to have a lot less than that, but mentally, it's like coming in the casino with a big bankroll, right? Oh, I can lose a few trades, who cares? And then you don't have any risk management. But on the other end of it, you can learn so much more with that small pot of capital, and you can grow it so much bigger. Couple other questions are starting to roll through. We've got Jean Louis. He's here. Great to see you. Peter asks, what question should I absolutely ask Steve as a beginner trader? And what would be the answer? Oh, that okay. So he's asking you what question he should ask you, and what would be the answer?
That's a genius. That's a great way to use AI too. Asking AI what you should ask it. You should ask like, what is the number one dynamic that makes you become a profitable trader? Like, what is that? What can it be reduced to? What is it? Psychology, risk management? What is it? And what it is a positive expectancy model that you trade with the right position sizing consistently. That is what creates a profitable trader, and that's a deep subject to learn. You can study a long time to find that. You want your system to have whether you back test it, study charts, the way you manage your stop losses versus your trailing stops and profit targets. You want your system to have a positive expectancy that you will make money over a sequence of trades, but you have to execute those trades within the right position sizing dynamics where you don't risk ruin on a string of losses. Like whatever your win rate is, you can see what your probabilities of having a losing streak are, and you don't want to be trading so big that your first losing streak ruins you down to 50, 60, 70% drawdown or worse. And then you also want to have your positive expectancy system has to match your beliefs about the market, your available screen time, and your risk tolerance. And you can only do what you believe in, that you have time to execute. So you get that right, that is trading. And that is a lot to get right. You can spend time, but at least you stay on the right track and don't get off of that going down rabbit holes that are silly. What stock should I pick? What stock do I buy? When should I sell this? I mean, that's like asking a doctor, like, hey, teach me about medicine real quickly. Hey, how do you have a quick surgery? How can I make some quick money in medicine? Like, you go to medical school. That's the first thing you do. So, I mean, I don't know. People think coming trading like a gambler when it's a business.
Yeah, good point. I mean, I think that really hit home during like the meme stock craze, right? When
Oh
everybody got
man,
their stimmy checks and they're like, "Oh, we got to buy AMC and GameStop and the weed stocks and everything else," right? And then all those people lost all of that and maybe even more, right? I heard so many horror stories of people who, had a little bit of success in these meme stocks, and then they turn around, they borrow funds, they get it from their family, whatever, and then it's just gone. And so I think that risk management aspect is so crucially important. Let's see. Michael asked a question. I love moving averages 101. Just getting back to basic price action. In today's market environment, what are some moving average strategies you would consider as strong indicators?
My favorite has become the 5-day, 20-day exponential moving average for the speed and the change and the capture of a short-term swing. That is
The
really it's one of
crossover
the
of those
best.
two?
Yeah,
The
the
520 cross?
5-day, 20-day
Gotcha.
EMA. That's been my favorite crossover signal because of the time frame. Yeah, the 520 cross. My favorite strategy is a 5-day, 20-day EMA crossover on the daily chart, and then trying to hold it till it runs back to a resistance, whether it's a 70 RSI reading on the chart, a previous resistance, or previous price resistance zone. That is my favorite one. Even if, and I'm just looking for some momentum to catch a few day. If I catch, like Chris said, I catch 3, 4, 5 day move, 2 week move, I'm thrilled and happy.
Mhm.
And it's like it keeps you on the right side of that momentum. It takes a lot of momentum to get that five back over that 20 and to stay there. And it also
Yeah.
gives you, when something, when it plunges, you have the 520 cross under. You stay out of it until the five crosses back over the 20. So you avoid the drawdowns and the plunges in meme stocks and things like that.
And though that drawdown is such a big deal, and I tell people, like, you don't have to have giant drawdowns. You never have to have giant drawdowns. If you look at the chart and it goes under your moving average you're following, the math will tell you you're not going to have a giant drawdown. I mean, of course things gap down, but you're not going to lose 60, 70, 80% of your account by following the market and just like watching it implode on you, right? Um, let's see. Mahesh asked a question here. If you trade options, I don't know if you still do trade options. If you trade options, what's your preferred contract expiry date? Few weeks, few months? How do you decide?
Used to trade the weekly options about no more than 2 weeks out. When I first started, I tried to do a month and at times, but I evolved to about 2 weeks out. If I'm in the middle of a week, I'll do the next week's Friday expiration. I try to give myself, because my trading time frame, like Chris, same to Chris, about 2 weeks is my trading time frame most of the time. So I want to give myself 2 weeks for the trade to play out.
Mhm. That's awesome to hear, because my go-to is 21 days, and then I look to go maybe a week shorter, a week sooner, but 21 days is like where my starting point's at. So interesting you say that. I mean, Steve taught me everything I know, so it wouldn't be a surprise if all of our answers are the same. Uh, Brian says, "What would you tell 25-year-old Steve if you had 5 minutes to impart some wisdom?"
What would I tell? That's a very, very good question. It's a very good. I would probably tell the idiot to quit trading so damn big and making things so hard. Probably the first thing I was like, I'd probably tell him what I said before, like focus on, to get try teaching the trading system, the watch list, the signals. I would teach 25-year-old Steve Burns just a systematic process for trading, because that would have been, if I would have traded the way I do now back then, I would have been far more successful. Knowing what I know now, so I would have done this to watch. I would just train like all my e-courses and all the books. I would just gave them that knowledge. System development. This is your watch
Mhm,
list. This is what you need to keep in and out of your watch list. Buy Bitcoin, buy Berkshire Hathaway and hold it, and just develop a systematic process, with the watch list and trading. I would have really trained him how to trade a systematic process with the right risk management that I knew would have fit me at that time, instead of
yeah.
trying to like be a just I don't know, young gun. I mean, I had the same thing in the 90s. I mean, just holding a lot of stuff. It reminds me a lot of stuff people do now with the whole thinking the buy and hold investor celebrating every all-time high, and uh and the thinking this could never go down, it could never crash, we can never have anything go sideways. I've lived through the the dot-com disaster in real time and the 2008 disaster in real time and saw it. And these
Mhm,
people are blind to the risks here.
yeah.
And even go back and study in the 1929 to 1953 market, where it was just sideways and you got dividends and you lost to inflation pressures. And like that probabilities are that's going to happen whenever this government spending ends. This party or the monetary policy has to go on higher interest rates to curb the hyperinflation that's going on. And so I would have, I think I got off track there, but no, I would have taught a trading system.
Gotcha. That makes sense. So we've only got about 5 more minutes, and then Steve said he's got to run. So let's continue those questions. These are awesome. Thank you guys for putting those in the chat. Mikey Mike says, Steve, of all your books, which five and in what order would you recommend reading? And he's already read New Trader, Rich Trader. So Steve, what are your top 5 books that you've written, and what you feel is the best order?
It's a good one. New Trader, Rich Trader 1, New Trader, Rich Trader 2, New
Yep.
Trader 101 to get the basics going. moving averages, 101, and then swing trading, the ultimate guide to swing trading. I think that would give a really good early foundation.
Perfect. Yeah. Peter says, that's a great question and such a valuable answer. Thank you, Steve. Mahesh asks, how much weightage do you personally give to insider trading from, let's say, company insiders or some big funds? How do you decode that information in your mind?
Insiders, I don't care about insiders selling. Usually, insiders have lots of reasons for selling. They don't know when they got in to when they got out. Like insider selling is almost no waiting because they probably just want the money, or they've been in so long, it's time to take money off the table. Bezos got in at $1 or whatever, split adjusted. So Bezos sells, it means nothing because he's been in forever,
Mhm.
and he just needs to convert it to something else, diversify. So selling, nothing. Buying is a great bullish signal for if you want to do some fundamental dynamics. Insiders buying, they know a lot more than you know, and then on the blackout periods, and they're buying, they know that the business doing good and their numbers going to be good, or they think they know. So it's a very bullish signal for insiders. Uh, for the institutional buying, I try to have only the stocks on my watch list that are being accumulated by institutions, and that's always been my play. You want to be the dips of the 50-day moving average, only work, if you have institutional support. A lot of institutions will acquire at the 50-day moving average, or, the 200-day moving average. They want to get in those dips, but you have to have institutional buyers to really hold those stocks up and buy those dips. Much
Mhm.
easier to trade when you have the support of insiders buying and you have institutional buying. They actually cause the massive uptrends and breakouts and trends are caused by institutional buying in most of the growth stocks, especially the tech stocks, the Max 7. So, yeah, those are two of the best bullish indicators, especially for watch list selection. You want to put things on your watch list based on, you can put things on watch list based on fundamentals, but then you want to trade them based on technical signals. So it's two steps to the process. So great way to acquire a watch list based on those factors.
How much, or do you follow any sort of Congress trading, right? Are
Uh,
you following Nancy Pelosi's trades like you would an insider?
Yeah, that's another dangerous game to get involved in. But if somebody wanted to, I'm sure that's not my strategy or system. But yeah, that made a lot of people a lot of money, because I mean that has been a thing. The problem is, it's not real time. It's delayed reporting, just like with the 13 Fs with the mutual fund managers and the hedge fund managers. You're getting late information, so they could have got in before you did. I don't think it's
Right.
real. They have to report it. So by the time you report it, they could already be up 20, 30% ready to sell, and then you're just getting in. So I think that delayed information is not good.
Yeah, you become the exit liquidity at that point.
But yeah, you
Yeah.
don't know their entry or exit or timing.
Mikey Mike says this is awesome. And Steve, this has been awesome. I really appreciate you taking the time. I know you've got to run. So we'll go ahead and start wrapping it up here. But Steve, listen, it is great to catch up with you. I'd love to be able to chat with you again some more and learn more about what you're up to. But everybody, please be sure to go follow Steve, go buy all of Steve's books. Like I say, this one, New Trader, Rich Trader, one of my top 5. Another one that I would absolutely recommend picking up right away is How I Made $2 Million in the Stock Market. And Steve was talking about earlier about how he loves the historical stories, like the real trader stories of the past. And this is an incredible story right here. And then you can see baby Steve on the back. Look, Steve, I told you, you haven't aged a day, dude. That was in 2012. So let's see. Uh, let's catch up on the final bit of chat and we'll drop Steve off. Thanks for coming on the live stream. It's really informative and fun to hear from someone who I follow on Twitter since 2019. Absolutely. Thanks, Wes,
Nice.
for that. Mahesh says thanks. Brian says, if you don't trust her, would you follow her trades? Bro, listen, I don't trust lots of people, but if they're gonna make me some money, that sounds good to me. Leo says thanks, Steve. Mikey says thanks as well. And again, Steve, thank you so much for coming on today. Really appreciate you taking the time to do so. We'll let you drop off. I know you got to get busy.
Thanks, Chris. Great to talk to you again. It's been 5 or 6 years. It's crazy.
Dude, I know it's crazy. We're going to have to catch up again later. All right, Steve, have a great day, my friend. We'll talk
Have,
soon.
have a great one.
All right. Thank you all so much for coming to today's special live stream. Oh, my camera has shifted on me. I know that this has been a little bit different today. However, we want to start doing more of these trader interviews. So if you have some traders that you'd like to see, let us know over in the Discord. I'll do my very best to reach out to them and connect with them. Of course, I've got a pretty great network where a lot of the people that I've reached out to are friends of mine that I've had for ages. So really cool to be able to see Steve like that today. And again, if you haven't gotten Steve's books, he did mention his top 5 that he would say go grab, and absolutely would recommend all of those. I can't believe he's made so many books that he has completely lost track of them. I think that's hilarious. Let's see. Dave says thanks. Michael says thanks, and I want to say thank you for coming and watching live and participating. I know that you by coming, watching live with your questions, you made this better. So thank you so much for coming. We'll be back to our regular scheduled trading room tomorrow. Hopefully we'll place on some new trades, and let's see. That's really great to have someone like Steve coming on here. You're welcome. You're welcome. Doing the best we can to take care of our outliers. You all have a fantastic afternoon. See you right back here tomorrow. We'll talk soon.